All right. Good morning, good afternoon, good evening. This is Will Bridges from 123Trade. Got a lot of trade ideas on the way here in today's session. Hope you guys are ready. I want to try to use a little bit more tools that you guys typically watch me use. So I'm excited to try to speed up the process and show you guys how you can do, well, a lot more analysis in the same amount of time. Because I think, well, efficiency is king. Because I love to trade. I don't really like to look at my computer. My eyes have a tendency to get tired. But let's get the show on the road here. I just want to make sure that you guys can hear me. You guys can see the screen. We're looking at the right screen. Good morning, everybody. How we doing, Philip? How we doing, Antonio, Carrie, Charles, Dava, Regina, Manpreet, Mark, Nancy, Oscar, Philip. We got a couple. We have a few Philips in here today. Should be a great one. Well, let's just say a lot of people are afraid of inflation. As a trader, it's Christmas in July, people. So let's go ahead and get this show on the road. Got to cover our base. First thing first, I got to show you the risk disclaimer. Everything in this video, if you're watching on YouTube, this will be on YouTube later. So if you want to go through and look at these trade ideas, all that stuff, this is going to be broken out into chapters in the description below the video on YouTube. But that said, everything is going to be educational. You guys do with the information what you think is best. You do have to risk it to get the biscuit. Okay, so there is no such thing as a guaranteed trade or investment. The only thing you can control is your risk. All right, so if you have questions, I am going to be paying attention to the chat box. Please, please, please get my attention because the last thing I want to do is leave anybody behind. We do have a lot more resources that we've just added to the website here recently, just to show you guys. You know, we put lots of market. There's going to be more market update type stuff in here once I get the core methodology things out of the way, because I want to try to spend less time teaching people how to draw things like support and resistance and how to find trend, how to manage their equity in these sessions. These lessons are 15 minutes long, something like that. But generally speaking, it's exactly what I do. And if you're looking for, more strategy, how to use the charting software type of stuff, there are basically a whole section here for learning how to trade with Fibonacci's and, well, basically everything that I think you really need to know, all the way up to trading with automations and MetaTrader 4, monitoring your account, all that fun stuff. But otherwise, I will be still continuing to post things in the Facebook group. Some of you may be here for your first time. Who's here for their first time? If you're here for your first time, just put a quick me in the chat box. How we doing, Val? Awesome. Welcome, Nancy. Welcome, Charles. I used to go through a lot of stuff in here every week. Basics on how to set stuff up. A lot of people aren't sure exactly what we do. All of you in this trading session got a trading account through us, period. Our primary focus is to make sure people have the best trading conditions in the world for wherever they are, whatever it is that they want. We want to give as much guidance and mentorship as possible to make sure that people have a long and prosperous trading career, because that's good for everybody. And, we want to help you get past the basic stuff. A lot of people get stuck at the beginning. How do I plug this in and turn it on? We want to make sure that we crush all that stuff for you, and you can get over those, technology hiccups early, because you should know how to use things like MetaTrader 4. You should know how to use all the buttons in the charting platform, and that's something that you could watch, an hour and a half of videos and be there. And that's the type of things that we're going to provide on the website. Okay, so a lot of you got free access to things from us. We're going to show a lot of different tools in here. If there's a specific tool that you need to know more about how it works and how to execute with it, that's what we're going to do in these sessions. So if you have something you want to ask about, then ask me. We used to go through this entire list of stuff in here, how to place your first trade, all this jazz. All of this stuff is on the website. So if you want to know how to do any of these things, all of this stuff is in the videos that are on the website. I don't think that's something we need to show in here every week anymore. I think everybody here is probably more interested in, well, checking out some charts. So let's get to it, okay? And we haven't been here in a couple of weeks, so we've got I think we've closed out a couple of losers. We have a few winners running right now. And it looks like history-wise, yeah, we did better with automation than anything else the last couple of weeks. Looks like we made some inexpensive bad choices, which is okay with me. And current active positions, we're looking pretty clean. So right now, you know, gold feels like a pretty good opportunity to me. Probably a hold on stuff like gold and silver. I think silver may be down a little bit from where we had looked at getting in it. I think that might be another account. I might need to open that one too. But we've been down on silver for most of the year, and I think we've won something like 14 out of 17 trades in here. So oil continues to be strong. I know we talked about $80 oil, and I've got the Smart Analytics tool up on oil right now. We might as well just go ahead and take a look at it. And Smart Analytics basically just draws all the Fibonacci levels. It scans for you. Okay, so I could draw all these manually, or I can have this system do it for me. Oh, give me 1 second here. That's a good point, Charles. I'll share the link to the website. And if you go to the portion that Forex Education for Beginners, there should be a video there that's just placing your first trade, if I'm not mistaken. And actually, that may not be on I guess the website only shows 6 of them, so it's going to be on our YouTube channel directly. So I'll just give you guys that link. 1 second here. Because we've got just to show you guys, we have a lot more content, I guess, on the YouTube channel that doesn't all pull into the website. So it is all here. There's lots of topics if you want to know more about, you know, our positions on silver and oil, what we did 2 weeks ago and 3 weeks ago, whatever. Why are some fib charts green and yellow and other fib charts pink? I'm not sure what you mean, Nancy, as far as pink goes. As far as green and yellow, it sounds like you're talking about MetaTrader 4. Otherwise, I use Smart Trader, so those are color coded, and we'll pull that up here in a second. Let me get back over to the chart so I can better understand your question. Okay, so you're talking about these ranges that are here, these boxes. Okay, perfect. Okay, so what this is, if this thing scans, this is the Smart Analytics tool, and if you do this manually with the Smart ABCD, it's going to shade also. Okay, the shaded area, if it's green, that is what you would consider a buy zone. Okay, the higher up in this level becomes more of a sell zone. What this is basically showing me is that the long-term extension level and the sub ABCD are both looking at $80. Okay, so we've been moving up on oil for a while. This might be an opportunity to just take this last push up to $80 and do exactly what Goldman Sachs said it was going to do how many ever months ago when they said that, and we decided to follow along with them. So here's literally what I think the opportunity is on oil. I'm going to come down to a lower time frame, so this is easier to see prices instead of stop loss. But really, this tool is really awesome just because it kind of just finds all of the heavy levels immediately. And if you want to scan for trend with this thing too, you know, I'm feeling extra lazy today, so I'm just going to scan all my trend lines. The heaviest levels, the heaviest trend lines that it believes exists are the ones that are the darkest. I got a green line in the bottom, so I'm going to assume that this is still an uptrend because it has been for the last, I don't know, year. So I'm going to think that, hey, that continues for more days, and we're at a lower price than we've been. So let's go ahead. Let's go ahead and figure this out. Let's make sure we've got the right risk-reward ratio on here. Maybe we come down to a smaller time frame. See if we've got maybe some better lows that we could use, or maybe tighten up our stop a bit. I think maybe up here at 70, 71 is probably a safer bet for me. That risk-reward looks pretty nice. Let's punch this thing into the driveway at $80 and see if we can get there. You're not going to be able to trade this directly from Market Traders without clicking this button over here. So you need to choose the account you want to trade it in first, and then scroll down this list. You're going to need to find crude oil on here, okay, to actually place this trade. And this is a little bit different with Forex. If you haven't placed a trade before, I know a couple of you are in here are new. This is probably not the first one you want to do because leverage is going to be a little bit different. So I will come back in a minute. We're going to look at lots of FX pairs. We're going to look at, well, I think there's good opportunity on a lot of dollar pairs right now. But let's go ahead and figure out what to do with oil here. Rate value, let's just say 70.8 will be my stop loss. And my limit, let's just say 80 bucks. Okay, so this number up here, okay, for lot size, I would typically recommend starting small with. If you've never traded oil and you don't know what lot size makes sense for you, I would suggest doing that in a demo before you do this live. But I'm going to go ahead and click on buy. And we're going to let this thing rip. Because I've got 2 to 1. And, well, primarily it's can you afford the stop loss? I'll explain this. It's a little bit more straightforward with FX pairs. So let's go ahead and take a look at something that really everybody should probably be more comfortable with. Be something like the Aussie USD. Okay, one of the more popular pairs to trade, especially lately. People have been, well, trying to sell this thing for a long time. And you know what's funny is it's actually a downtrend now for a lot of reasons. And the Smart Analytics tool kind of showed me that immediately as soon as we got here. And right now we're at the edge of this boundary on the 3-hour chart. So if I want to find an entry on something like this, this is very cut, dry, straightforward. I can look at the high time frame first before I make my decision. Okay, so high time frame wise, it looks like we haven't yet made it back to. It looks like this is would be our 236 here. Or no, we've already dug deeper. I'm looking at this upside down. I apologize. So I don't see any reason why we can't get back to this, 618 level that it formed earlier. Let's mark that level. Just gonna leave a little bit of a breadcrumb for myself there. Come down to my weekly, see what we've got. On my weekly, we are in the sell zone. Looks like a fairly solid consolidative play for me all the way to my red line here. We might actually make this red line green, where we might rip the tape on life on this trade and move on. Let's hit the daily chart, see what we got here. This is still telling me uptrend. Okay, this is my 618 position down here below, so that may be aggressive. We may have a quick scalp opportunity, however, so just to mark another breadcrumb for myself, because the tool is going to change when I change time frames. So I'm just going to mark one for myself here at 382. That's somewhere around 100 pips from where we are right now. I think the 382 is extraordinarily likely. So I may not aim at this lower level here. I may come down to my 4-hour now. Just need to find a place to put my stop loss. And what I'm doing is I'm just kind of working my way down. And I'm whittling this thing away. Okay, so right now it's at somewhat of a high. I need a place to manage my risk. So maybe I could use, well, let's get a current market price on here. Let's actually put this in blue so we can have easier perspective. Okay, so this is where we are. Okay, so that's going to make it a lot easier for me to figure out where my stop loss could be. Okay, so where my stop loss needs to be, I got to have a previous high, something that I can use as a shield, price level where the market has turned before. Keep clicking the wrong button. Sorry about that. So I've got a high here. So that may be my trade right now as we speak, because this has been making, well, we've got several down trend lines. We don't really have anything telling me that this thing looks like an uptrend right now. And we're getting lower highs and lower lows. Just to show you guys what I mean, I put out a video on finding trend direction here yesterday or the day before. But basically, this is what I'm paying the most attention to. Is that's a high and that's a lower one. Here's a lower one, lower, 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 lower. Okay, so you guys get the point. I'm expecting that this lower one here, this lower one could be the next one. That's really it. Same thing goes for the lows on the bottom side, because this market's been working its way down. I might as well try to see if we can take part in that action. So let's go ahead and measure the risk, because that's really what matters the most. Doesn't really matter if you're right or wrong all the time. You really only need to be right. If you're right half the time, you can be a pretty profitable trader as long as you manage your risk well. Okay? And what I mean by managing your risk well, okay, is understanding this, 68 pips. How much money is that going to cost if I lose? Okay, so 68 pips to try to get something like 95. Not a terrible risk reward. If you aim for higher risk reward, your win rate will go down. Some people are comfortable with that. Some people are not. So usually people fall somewhere in the range of about a 1.5 to 1. Nancy, the fibs are shaded different colors because it's aimed in a different direction. If it's telling me that, well, right now we're basically looking at a downtrend. So this shaded area above here is going to have pink at the top, because that's where I would likely want to be trading. If it's a sub ABCD, so if it's not the major wave, it's going to be not as dark. So this major wave here, this is a much darker green. If it shows me a sub wave, it won't be as dark, because the subwaves are less important. They get controlled by the higher time frames, if that makes any sense. So keep in mind, the darker the color, the more impactful the system believes that it is. That's what that is really about. I know it's a lot to look at. This thing took us 2 years to develop, though, so it's got a ton of power built into it, and I think it's an unsung hero, because when I'm not doing sessions and teaching people how to draw trend lines, this is what I use, because I'm lazy and it does the same thing. so or I can make it do kind of the same thing. I mean, if I want to see less lines, I go to a higher time frame. But I know I'll explain that more as we go here. I don't want to get too far in the weeds on this one currency pair. But okay, so let's talk about this, and I'll do this example. I know there's a lot of new people in here today, so I want to make sure that I help people understand how to open something like this. So if I know this is 68 pips, okay, now I need to know how much money is at risk. Most people risk 1 to 3% of their trading account at any given time. So if I put a 0.1 here, this is a $68 risk. If you're not okay with losing $68 on a decision, like you just bought a sandwich, then you shouldn't place the trade at that amount. You know, if you're okay with 0.01 and this actual sandwich price of $6.80 is okay with you, and you can go to sleep and you can walk away from this trade and not think about it, probably a better lot size for you to think about, because you want this to be something that the market does the work. You don't want to be doing mental gymnastics all day thinking about this stuff like your ex-boyfriend. So realistically speaking, this number is the most important part of trading in any decision that you make. So it's not so much what I put, it's what makes sense for you and your brain, and what you are willing to put into each decision that you make, what you're willing to lose. Okay? Obviously you don't plan to lose, but you plan for the possibility that you might. Okay, so that's what trading is all about. People that understand that are people that can make money long term. People that don't should probably spend more time watching more videos. So I'm not sure what else to say about that, but let's go ahead and place this trade. Oh, wait, hold on a second here. Invalid. Oh, I see what I did here. I didn't put in I've got my oil stop loss in here still. My fault, folks. Sorry, I got way in the weeds with the explanation here. And let's get this at 0.73746. All right, and now I'm going to click sell. And now this should actually work. Yep. Cool. And let's move on. Okay, so typically, you know, I like to work the angle on currency pairs that correlate. NZDUSD is going to be a lot like the Aussie USD. So if I found an opportunity I liked on the Aussie USD, there might be one on the NZD too. And this looks almost exactly the same as what we just flipped over from. So very easy for me to figure out what I might want to do. I'm going to go ahead and draw a couple of lines here. Let's get our current market price, because that one's easy to draw. Make that one blue. I always like to have that there. It just gives me perspective, because I need to know what I'm going after. Is it worth it? Where does my stop loss need to be? You know, this NZD might be a little bit more volatile, it looks like right now, than the Aussie, but we've got a similar high that happened, I think, on the same day at the same time. This is just as good as my other trade. If anything, I could try to be a little bit more conservative here maybe, or we could just jump in now. That's kind of a trader's choice if you like the risk reward or not. Okay, so the risk reward right now could be tighter. Let's come down to maybe a 2-hour time frame. Let's work our way down a little bit tighter on this thing. So we've actually got another range here. Our current range is actually down here. So I can be a little bit tighter on this. I feel a little bit better about my risk reward ratio, because I do have another fib range with a nice pin bar formation at the top of it here, which is actually what this market is measuring kind of as we speak. So I'm going to go ahead and place almost the same trade here that I did on the Aussie New Zealand, or on the Aussie USD, excuse me. Go ahead and plug in our stop loss, 0.70414, and my limit, say 0.68726 is where I have that drawn. So now I need to know how much money is at risk, is the most important thing. So I go ahead and measure 63 pips, okay, to try to capture, you know, 103. So very much the same kind of trade that we just punched in on the other one. So if I'm comfortable with, you know, $15, I might do something like a 0.02. If I'm comfortable with $30, I might do a 0.04. Realistically speaking, you can put whatever you want in there. It's whatever you think is an insignificant amount for your account, because you don't have to worry about this decision and you can walk away from it. So everybody's got a different amount of money in their account. Well, not necessarily everybody has a completely different. Everybody has a different value on the money in their account. Some people ask me, well, how much should I start with? I don't know. How much are you comfortable losing? Because as soon as you reach that level, then you'll actually be able to sit in this trade if something happens. For example, that happens all the time. I'm going to show you guys what might happen here. And this is really what could happen. Okay, this thing could come up. It could inch up. And while it's doing that, you could be sweating bullets. This is where your fingernails start to come off, because we're getting close to the, I'm going to have to get out. We're going to hit the stop loss. I don't want to lose that extra 3 pips. Okay, people do that all the time, and then the market does something like that. So you have to be willing to lose the trade to win in that situation. Okay, so until you understand that, consistency is going to be hard for you to find. So that's something that I want to make sure that I show people as often as possible. Okay, because this could very easily dig against us. You want to trade with something that you can deal with that. Okay, so we've got another trade idea here. NZDUSD. What are we already in on the USD here? Not enough. Not enough. So we've got the NZD trade that we have not yet hit sell on yet. So let's go ahead and get this thing out of our way. Okay, let's take a picture of this bad boy and let's move on. Let's check out the euro. Everybody loves the euro. The world's most traded instrument. This is a fun one. And Smart Analytics is kind of showing me a little bit more action on this one. I'm going to get rid of the smart resistance I think that we've got on here. Get rid of this stuff. I want a little bit more latitude on what we can see here. All right, so this is telling me that we're looking at a downtrend. We're at kind of a low price on the Euro USD. So this thing may want to come up a little bit. I would be hedging myself to do something like this. Let's go ahead and look at the higher time frame before we go ahead and make a decision. This is a little bit different than what we've got going on in the Aussie USD. This is the most high volume instrument, most heavily traded instrument on the planet. Okay, so this thing is going to consolidate a little bit more than other currencies. When I say consolidate, I mean go sideways. If it makes a big move down, oftentimes it's going to move sideways. We've been doing that for the last, this is a monthly chart. We've been doing that all year. Okay, so it's very much a battle with the bank with the European Central Bank and with the Federal Reserve. They are really both trying to race toward the bottom. They're trying to outprint each other. Who can have the weaker currency? Because it's basically putting everything on sale. They need to raise demand for domestic goods. So they are trying to drive down the value of their money. And they're doing it at the same time. Every country is doing it, actually. So it's not just these two. These are just the two most prominent. That's the only reason why money still works. It's because everybody is inflating. Okay, so let's go ahead and come down to a slightly lower time frame. This month is really just showing us that we've broken our current downtrend that we've been on. But end of the day, this thing has been a downtrend for many years. We've got a high on the right side of our trend line that broke here. It's actually lower than the one on the left. So that very much tells me that we might be in sideways territory, which is okay. I just need to recognize that we might be in sideways territory before I place a trade so that I know what to do. Okay, so right now, this thing has made some fairly strong moves downward. We have this broken trend line here. We have an outer trend that we are still kind of trying to test. So this thing has really just been going sideways. We haven't quite made it back to this 382 level here. Let's actually leave a little breadcrumb for ourselves there. Put a green line on there. That may be where we aim. Okay, looks like we got close to it. Didn't quite hit it. Maybe we can double check ourselves. Yeah, looks like we got extraordinarily close and didn't touch it. Okay, so let's come down to the daily time frame, see what else we've got here. And this is showing me that we broke out underneath this uptrend line that it doesn't think matters as much as these dark red lines that we've got on the top. So this thing is bearish for me. it could decide to come up and go sideways on us. So I'm not necessarily as confident about this one in the short run as far as just shorting it right now. We could reel ourselves in just in case the dollar has some strength. We want to be prepared for that. The 618 up here in this range, okay, is just above. So I'm going to go ahead and just add a pending order for this potential situation, because if we lose our other trade, this one, our other two trades, this one will enter at the better price. Well, it should. I would expect it to. And then we can be in a better trade than we were in before if we happen to lose. Otherwise, if this just falls like a brick and we miss this trade, nothing happens. And I just come back later and I delete this pending order. So this isn't going to be something that we enter right now. This is a pending sell, so I need to click on pending and then click sell. Okay, so once I've done that, then I pick the rate value 1.205. Sounds good to me. Hold on a second here. 1.205. All right, now I need to stop in a limit. Type in those rates, 1.2242, and my limit 1.1. We'll call it 7. Even. Okay, so this is a much larger swing style position. Okay, this could take a week to enter. Some people are going to want to try to scalp this in the meantime. I think we're at a low price, and I want to be selling because I think that's the direction the trend is going lately, because we haven't necessarily broken any of these uptrend lines. So I think maybe we try to come back up, test these lines. I want to wait at the sandbar and try to catch the wave on the way down. So that's what my plan is here. Okay, important part to understand before you do this, the number that you put in here for a lot size, those of you that aren't paying attention, this is a much bigger stop loss. This is a $192 risk with a mini lot. Okay, so if you're more comfortable risking something like 20 bucks, this might be something you do a 0.01 or a 0.02 to risk $40. Okay, so I'm going to talk more about risk in here than I am going to talk about the amount of money you can make. I am going to make sure that my potential reward is bigger than my risk. But I like to think about the risk while I'm trading so that I don't have to think about it when I'm not. That's really the whole point. Okay, so I really can't stress that enough. I think everybody asks me the difference between people that make money and people that don't make money all the time. That's it. That's literally it. All right, let's get a picture of this thing too here. This is a pending order. I think something that might be fun for anybody that wants to get into this one later. There's going to be solid pending opportunities on the euro year after year after year, because this thing makes, well, it's got a ton of volume. And that's really the biggest thing that contributes to technical analysis being useful. All right, now we're back at the GBPUSD. This is something I'm a little bit more bullish on for a lot of reasons. Okay, not just what's on the chart here. I'll actually pull up the economic calendar here real quick. Show you guys one of the main reasons why I'm bullish on, let's do this month. Let's change this on the GBP, because I don't know if any of you have seen all of the videos that we've made. Some of you probably have, but really I don't want to make that a requirement. I want to show you guys the asset purchasing facility in the UK. It's been extraordinarily huge and growing, and what that is it's the rate that they are actually buying their own bonds. Okay, so it's like a company buying their own stock. Let me see if I can't find it. It might be last month that this number came out most recently. Let's see. I know that it's been relative. Let's see. Control F, asset. There it is. All right, so what we're looking at here, okay, this graph on Forex Factory is just showing you how much they've ramped up buying their own money. Okay, the reason why they're buying their own money so much is because they probably want to drive up the value of their money. And they started seeming to do that a heck of a lot more as soon as Brexit happened. You know, they decided, you know what, we're not part of the EU anymore. Let's buy a bunch of our own pounds. So they've been doing that at unprecedented rates. So absolutely huge, and ramping that up. Okay, so there is a ton of action, I think, upward on the GBP, strictly because I think that's what the bank wants. Okay, and if the bank really wants it, they're going to kick and scream until they get it. Okay, so that may be another reason why that euro comes up higher. Okay, the euro is likely to consolidate, in my opinion, more than the GBP. I don't think that the eurozone is dedicated to having a strong euro. Sounds like they're talking about, Christine Lagarde came out and mentioned more room for lower interest rates the last time I heard her give a speech. So she's talking about weakening the euro. So that's why that one is a little bit confusing. This pound USD could very well be sideways as well. Looks like we've already got a trade set up here from last week. But I'll go ahead and just delete this so you guys can see how that came about. But reality is it's just it looks like the extension here above. Oop, got a green line here. Okay, that's our next Fibonacci extension to get us out of this range. That would be a pretty big deal. Okay, that's basically, we're right around the price that we were at when the Brexit referendum passed, which is a pretty big pivot point, I think, for the GBP. If we break above that line, this thing's got room to go a long way to the north. I mean, 382 on this range up here, just to show you guys long-term outlook where this might head. This could get all the way up into the meat of this market. I don't know if you guys see how friendly this price was, but the market spent a heck of a lot of time at my higher green line. It's hit that price probably more than any other price on the chart. So the odds of us seeing that price again are higher than any other price that's far away. You know, it's generally just been a big magnet on both sides, okay, for many years. And I'll just show you guys what I mean. I'll circle some of this stuff so you guys can see what I'm talking about. But this area here, we bounced on this price for a long time. We turned around it here. This is years of action on this price, just so that we know what we're talking about here. Okay, so this has been a very heavy level for a long time. It's high above. That's, you know, from where we are now, that's a couple thousand pips. You know, so that's a pretty big call. You know, if you also don't take into consideration this thing has already made a move since January of last year. Okay, we're already up 2,400 pips since then. Okay, so it hasn't been that long. We broke this big downtrend. Okay, all I'm trying to do is come back to the friendly zone, you know, get back to this 382. This thing fell like a rock back in the, you know, mid 2000s. So, I mean, it may take they probably want to try to get a little bit of that strength back, especially after they just left the EU. They don't have to be part of their weak money policies anymore. That's one of the primary reasons why they left. Okay, so no, it is not going to come straight up. Could it come down right now? Maybe. Okay, so we've got sideways movement here. This is actually a dark cloud cover formation that we're looking at on the monthly candle. So that does kind of bode toward us coming to the south for a little bit. Some of that might be, you know, some short-term strength in the dollar, just because they came out and said they were going to raise interest rates earlier than they had planned to previously. So there's a lot of people afraid, you know, of some downside risk. But realistically, I mean, this thing's making a higher high right now. Right now. So I think we've done all the confirmation that I care to do. I think this thing is making a turn. I think we're here at a great time. I think I'm going to come back to my weekly chart. Okay, I'm going to get a current market price on here. I like to trade from the higher time frames. A lot of people ask me, you know, why are you making a trade from this time frame? And it's because, you know, you use the high time frames to find direction. You use the low time frames for precision. If I've already decided I want to get in right now, this is the best place for me to see places to enter and exit as far as I'm concerned, because we're so close to some pretty heavy levels on this chart, on this time frame. My risk reward ratio here is huge. I can actually be even more conservative than what we're looking at here, aim even a little bit lower, and we still have a pretty attractive risk reward on my short term opportunity that we're looking at. And I'll just dump the analytics here for a second so you guys can see this. But that's pretty much what we're looking at. If this thing turns around, you know, comes this way, maybe I want out. Okay, I could be even more conservative if I want to, okay, and just try to trade this thing for a 2-to-1 on my money. So maybe I don't even need to get out of this range. Maybe I just come to this friendly price up top where my 114 level is, because that's basically a 2-to-1. This would be a consolidation move. This would be a straight up, I'm looking for a sideways move on this trend, because maybe I think the pound and the USD are both going to be strong. that's probably the highest, well, not probably, it is the highest probability of any trade that I've shown so far, just because the market doesn't have to go so far. Okay, so let's measure this out. See what we got. Risk side, we've got, looks like 175 pips, okay, to try to capture, 258. Okay, so we may even look for a smaller scalp opportunity down here if you guys want to check out something like that. Or you may actually run an automation on something like this, which I think is probably one of the preferred methods on something like what we're looking at. But let's go ahead and type in our risk here. Need to get a market order on this. We're going to do a buy. So let's go ahead and get our stop loss, 1.367. And my limit, 1.41. All right, so this is a consolidative move that we're now looking for. I think it's an uptrend, but I'm going to treat it like it's going sideways because it kind of has been. Okay, we were very much dug in. If this thing breaks out, it's all the way at our green level. I would really only expect it to get to this 43499 level, which is actually still pretty far away. Some people may wait for that. If you want to play this, be a little bit more conservative. I think there may be more opportunities to get in again after we try to take profit at 1.41. No gospel in the world. This risk, okay, so if you're not 100% certain how far this is, okay, so just to show you guys, it doesn't look like much on this chart. It's 175 pips, so 0.1 is $175. Okay, 0.01 is a $17 risk. Okay, that's a little bit more in the realm of everyone territory. Okay, as far as a 1.0. Okay, that's a $1,700 risk. So if you're not prepared to do that, you don't have a $100,000 account, you probably shouldn't do that. Okay, so a lot of people are going to trade in this 0.1, 0.01 is going to be a lot of people when they first get started, just because your first trade, if it's your first time, I don't think there's anything better to do than a 0.01 if it's your first trade, because your heart's going to beat fast, because you're finally going to see that it's really easy to make the money move. Because really this is all that you have to do. Click it, done. Now the money's going to move. So there's a ton of opportunity in the world. You don't want to marry any of these trades. We're down the spread in all of the ones we just opened, and it looks like gold is coming back our way right now. But let's keep on moving here. And a lot of people want to know which ones are the best to trade. If you're new, okay, I like to share these with people. Doesn't matter if you're new or not. I think the Aussie New Zealand is one of the best ones to trade. And for some reasons we'll show on this all time frame. Let's actually bring this up here. Get everybody up to speed on what's been going on with this thing. And the reality is that I think all of this information that's over here, on the left of this line, this vertical line, everything to the left of here is probably irrelevant. is in my opinion. Okay, and the reason why I say that is because the last, since then, this is really what we're looking at. They have really tightened this up. Okay, this has been the trend. This is it. Okay, no secrets on this one. Okay, this is what this has done. It's just gone progressively tighter. Okay, it's been top to bottom pinball. You can tighten up this line on the bottom here if you want to. Get rid of the extremes, the outliers that are on here if you want to do that. This becomes a little bit more obvious that we've got something like a range. If we come to a lower time frame, come down to our week, it looks even more sideways when you come down here. Let's clear all this stuff out. Okay, and let's actually just put a straight up rectangle on here, which is really one of my favorite tools, especially for this currency pair. The dollar's been in a range for the last 5 years. We're at the bottom of it right now, which is why things have been a little bit honky. But let's go ahead and just draw this. And the reason why I picked the levels I picked are because that's where the market's turned around a lot, or close to it. Okay, and I just like to use this box tool because it forces me to use my eyes to pick a level that makes sense, that's close to whatever it is that I'm trying to trade. Okay, so I've got 4 turnarounds of this price on top. I've got 1, 2, 3, 4, 5, 6 at virtually this price on the bottom. Really, there's more than that. If I come up a little bit higher, I'm a little bit more conservative, because that's really just the play zone down there. That's really the price pocket area. Okay, so it doesn't look like they want to get out of that area. It seems like as soon as we get out of that area, the market burns its fingers and it wants to go away. Okay, so I think that the more I whittle this down, the less aggressive I get with the market, the easier it is to find potentially very good opportunities. So what I would really like to get a good eyeball on now, okay, so there's two types of trend. Now I said don't pay attention to this other stuff over here, but the reality is this was a big downtrend before it went sideways. It's still making lower highs if we circle some of these here. So this is a very slight, mostly sideways, but still downward trend. Okay, so these highs are getting lower. Okay, so I still think downward. Okay, I still think downward, but I am going to be, you know, very conservative with how far down I want to take it. Just because I know this thing has been sideways. We've also got a trend line here, a counter trend, actually I should say, to confirm that we may be continuing our downtrend. Okay, and this is the downtrend that I'm talking about. I drew here before. Oop, sorry, missed the button. Okay, this is the downtrend that I'm talking about. Okay, so we're on somewhat of a downtrend. I want to manage my risk. Maybe I just try to take this thing down to the bottom of the box. It seems like a popular price. The market has rung the bell on the bottom of the box. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times. I think we might ring the bell on the bottom of the box one more time. Where's 12? You know, so let's go ahead and draw this out. Make sure that it makes sense. Okay, from a risk reward standpoint, because that's really the most important thing. Okay, we've got a lot of highs there. We could try to aim a little bit higher with that. Kind of depends on what we're looking at with our risk and where our potential reward might be. So I want to get everything in perspective. Show myself all these lines. Let's unlock this tool. Here's the bottom of our box. Maybe we're even more conservative than the bottom of the box. Maybe we just want to, there's other turnarounds at higher prices. So maybe we pick that one. Okay, we'll make this green. And really what I'm doing as I pull this horizontal line is I'm just looking for a place where a lot of turnarounds have happened before. And what I found when I did that just now, just to show you guys specifically, okay, this is what I used to decide where I wanted to exit, because I want to get out where everybody else is getting out, where they have before. Okay, so they got out here last time. Okay, they got out here. This area has been a bunch of meats. That all feels good to me. This was a turnaround though, and there's more turnarounds at that price over here. So I know that there's about a 50-50 chance that we bust through that price. So I'm going to try to get out at that price because we've stopped at it a few times over here too. So that really makes it obvious for me. That's where I want to exit. Let's come down to the 4-hour time frame so this can be a little bit more obvious how far this is going to go, what we're aiming at, what we're using to protect ourselves. Okay, this is what we've got. I'm going to go ahead and snap a picture of this bad boy. Show you guys how I might open this position. Okay, so first thing I want to do, get in my stop value, 1.0828. Okay, my limit, 1.05587. All right, so at that rate, we're looking to risk from current market price, like 127 pips, try to capture about 145. It's about a 1-to-1, a little bit better than that. Not everyone's cup of tea. I think very high probability. So really kind of a trader's choice on this deal. Some people may, set a pending order and get in at a slightly higher price. I may just sell it again if it comes against me. Okay, so this one is a very sideways market most of the time. So the reality of this for me is that I think if it digs against me, I could probably sell this 10 more times and it eventually will come back and I can work the grid. So just to show you guys where I might also enter later if this thing does dig on me. So that way I can shore up my risk reward ratio. If I get in at this higher price, if it happens to test that, and there's previous support at that level, previous resistance at that level, then, I want to get in again. Because it's an even better trade than I'm in now. It's a lower price for the NZD. Okay, that's really what this is. So I'm going to go ahead and set this up. I'm happy to get in this thing now. This is not as good of a trade as up above. If it falls straight down, cool, I win. If it comes against me, I think it turns around before it gets to my stop loss anyways, so I reload. That's really what I'm looking at in this type of situation, because I really like the downward opportunity on this. I've had great success with this pair over the years. So I don't know. I'm going to keep thinking that it's going to go sideways because Australia does a lot of business with New Zealand. I mean, it's pretty obvious. They're right next to each other. Let me measure this one more time. Make sure I do the right amount here. 121. This 0.1 is fine. That's $120 risk though with the 0.1, $12 with the 0.01, 24 with the 0.02, $36 with a 0.03. If you're planning on getting in this twice, you probably want to get in with half of what you normally get in with, so you can deal with the the blowback of having 50 pips come against you. Okay, which shouldn't really be a big deal. Okay, and 50 pips is not a lot. It's half of a penny. So if you don't make a perfect call on half of a penny, there are many other traders like you. So half a penny happens all the time. But let's go ahead and click on sell. Let's move on with our lives. I like to make sure that I'm keeping all of the trade values similar. Okay, so I don't want to risk $20,000 on one trade and risk 15 bucks on another, because then it makes the $15 trade irrelevant. So, and usually you're going to win the $15 trade and lose the $20,000 one. That's usually how that sort of thing plays out. But let's go ahead and take a picture of this. Keep on moving here. And let's go to, what else do we want to check out here? The USDCAD seems to be, actually, you know what? I wanted to check out oil. We actually placed that trade on oil already? I think we might have. I think we did. We certainly did. So let's go ahead and get over to silver. All right, and silver has been fun for a long time. I think silver is still the hottest investment on earth. I also think that the people that run this world don't want it to be, because 33% of all silver is used in electronics. Things like your cell phone, your TV. Silver is the best conductor of any metal on the planet as far as conductivity goes. Okay, so when you need something to send a lot of power somewhere in a hurry, you need fast conductivity with very low resistance. Okay, that's why silver is an incredible conductor. Okay, so it's actually a better conductor than gold. It's a better conductor than copper. The only reason why gold is more valuable is because, well, generally there's, a supply thing, but it doesn't tarnish. That's really the biggest difference. Okay, if we look at this now, we've got somewhat of a pennant that's happening. Okay, silver made a very strong move last year as soon as the madness started. As soon as, everybody got locked down, people started to think that the world is ending. We're at the Ragnarok right now, whatever it is that you want to call it. They're going to come out with another Netflix documentary on the end of the world here soon, I'm sure. So silver is going to be very hot. Supply has been very low for quite some time. So I'm going to go ahead and draw, actually, let's get down to a slightly lower time frame. Let's do the weekly here. Be a little bit more detail for us to look at. You guys can see this has been real sideways, and I'm going to draw a box on this. I don't think that we're going to get out of this box. Okay, I don't think that we can really get out of that box. We may come back to the bottom of it though, for reasons that don't make sense. But that being said, I'm still going to be a buyer on this thing. I'm very much looking at a ton of political risk here in the United States. There's a ton of political risk everywhere in the world right now. There are a lot of people, and actually, you guys can let me know what you guys think. I mean, everyone in this room is from everywhere on the planet. So do you guys feel like there is, more risk in markets and running business this year than maybe 2 years ago? Just give me a Y or a yes. You guys think that there's more risk in, it looks like lots of Ys. So the reality is, is the power in the world, the elites, are profiting from the situation. Amazon is taking over small business. That's what happens when everybody has to order things online because they can't go to the store. So, as long as those people, whoever they are are controlling the world right now. The government here in the United States is telling us that, we're going to be all electric. Gas-powered vehicles are going to be gone in 2050 is basically what they agreed to at the G7 with all the other biggest economies on Earth. So they are all trying to phase out gas-powered vehicles for something that requires a heck of a lot of silver. Okay, so do I think silver is a super hot investment? Yes. Do I think that the powers that be are going to try to keep it from being so? Yes. And here's the other reason why. Okay, just to show you guys how all this stuff fits together. Because I know I'm a dork and I like to know how things work and why things are the way that they are. Okay, and the reason why silver hasn't blown up like crazy so far is because paper to silver ratio is 188 ounces to 1. So for every 1 physical ounce of silver that exists, there are 188 people with a contract to own it. Okay, so that is a bunch of fake paper silver that doesn't actually exist. So if that system ever implodes somehow, then they're in big trouble and silver's going to go up. It could go up 188-fold all at once. Okay, it could be the biggest market crash for the COMEX that increases the value, the spot value of silver. Could be a lot of things that do that. Okay, so I'm still going to be long-term bullish. That does not mean that I don't have faith in the jerks that are running this world. So that being the case, okay, this is the trend for the last year. We had a strong down move. I may hedge myself and trade this thing south and hold on to my long positions. So I'm going, if I'm already selling this right now, or if I'm already buying this right now, I may just get in the other direction as well. That way I can basically zero out the trade. If this thing comes against me, so be it. I'm going to basically make nothing and zero myself out. Okay, if it has a chance to, well, we could actually come up. I could look to try to sell this thing more. I could look for a breakout trade. So for example, I might do something like a sell stop in this scenario. Because if this thing comes up, I'm already in as a buyer. I may not want to get in as a seller if it is just going to make a turn upward, because we are getting a higher low, we're getting higher highs. So I may just look for a breakout opportunity. If this thing comes down, say something like here might be my entry point. You guys will see what I'm talking about when I show you this in a moment here. I may actually do this in MetaTrader 4. But this would be if I would plan to enter if the market falls and busts this price below. Okay, so if it decides to go up, I'm already in as a buyer. I'm not going to do anything. Okay. In reality, if you wanted to get in as a buyer, just to show you real quickly what I might aim at. Okay, it might be this meaty area up top, more consolidation, sideways movement as the world fights against the deep state. I'll actually make this actually needs to be green, but our stop loss would be below here. Okay. When I say deep state, I'm talking about unelected officials in all of our governments. People that you don't really know exist, but they control the price of things because they control the regulation of how they are provided. Okay, and that's really what people have a hard time understanding is, why is this moving? No one told us that it should be doing this. Everybody's buying. So the thing is like, it doesn't matter if all the consumers are buying, if they're just creating new ways to make paper silver. Okay, so I have faith in the fact that they are dedicated to making more paper silver. Just as much as I have faith in the fact that the US government's going to print more money, and I have faith in the fact that Europe is probably going to have negative interest rates for a while, and Japan is going to keep doing that too. They're going to try to devalue their money like they have for the last 30 years. So it's really not about understanding supply and demand as much anymore. I used to think that was the most important thing when it came to trading, but economics is really not the number one thing. This is not a demand driven market. It is a supply-driven market, and how much money are we printing? The U.S. government is buying, I think it's 120 billion of their own bonds every month. I showed you guys earlier, just a couple minutes ago, this is what the UK is doing. And they've been doing this stuff. This isn't new. Okay, these levels are still big. These are billions. Okay, these are billions. 400 billion. Okay, they just upped it to 870 billion. So that's a lot of money, of their own money that they're buying. They're buying their own money to drive up the value. So if I know what they're doing, I have to figure out why they want to do that. You know, that's kind of a supply and demand thing. But really, at the end of the day, the chart is really what I want to pay attention to. The news is going to be confusing. It gives me an idea of where to look, okay? But it doesn't tell me necessarily what direction to trade it right now, okay? So that's why I'm going to lean on technicals. This was a big dip. We are getting higher highs lately for the last, several days, couple of weeks. So I'm going to assume that we're at a low price here. We might come back up, hit the meat of this market, could come down. Who knows? Doesn't matter what I think as long as I can manage the risk. Okay, that's really what this is about. So let's go ahead and just show how to open this real quick. And this is going to say non-tradable instrument here. Okay, so what I need to do is scroll down, select silver. See if we can find this thing. There we go. Okay, now my stop loss, I need to plug that in, 25.316. I do think that silver could come all the way down to $20. I also think it could go to 200. So it depends on you, what you're comfortable doing. I'm very much a risk reward guy. Does it look like this could play out? Sure. Just as much as any other trade that I've placed. Could I lose? Sure. Just like any other trade that I've placed. So you have to accept that sort of thing. Let's go ahead and get our prices pumped in here. 27.33. Okay, looks like a fun one to me. Okay, so we're looking for, $1.30. We're going to risk 70 cents. And, really the lot size is going to be, well, this is actually going to be about $130 risk, I think, with this lot size. If you have not traded silver or oil or any other CFD before in your live account, please, please, please just do it in a demo first so that you know how much money to put in this box up here, because that's really important. Can't say it enough. Rip City, though. We're in it to win it. Let's move on. Does anybody have, we're getting towards the end of my time here today. Does anybody have anything in particular that they would like to see analyzed before we get out of here? Because I know that I have a tendency to come in here and tell you guys what to look at, which I think a lot of people like. But I also want to make sure that, I give the people what they want. So if you have a currency cross you want to see, we can make it happen. Let's do that USDCHF. And the USDCHF is going to be a little bit different, the dollar Swiss, than the other dollar pairs, because it's a very the Swiss franc is a risk-off currency. Okay, so what that means is that if people are afraid of the market in Europe, for example, they might take money out of euros and put it into the Swiss franc. And the Swiss government may actually do that a lot. They actually came out a few years ago, and actually I'll show you guys this here. This was a few years ago. They came out and said that they wanted to unpeg the Swiss franc from the euro. Okay, so this happened. This was a total range of 1,940 pips that happened in one day. For the most part, I think this is literally just one day. Let's actually come down to the day. I'll show you guys the day. A lot of it rebounded. Let's come back here. Where is this? 2014. We had a lot of people make a ton of money at this level here. It was just a fantastic fall. Okay, they came out one night without telling anybody, 1 o'clock in the morning, and they were like, you know what? We're not going to peg to the euro anymore. We're just going to kind of let the Swiss franc do Swiss franc things. And as soon as they did that, the Swiss franc went up like a rocket, which is what down on this chart means. Okay, so as soon as they did that, the franc had big value. We came back almost all the way back to that price that we dropped like a rock from, because they probably figured out that was a dangerous decision to make, and they've still kind of been doing it. After they said that they weren't going to peg to it anymore, they kind of decided to keep doing it. And that's why we've been in this sideways range here for the last several years, because they don't want this big monstrous fall to send a shockwave downward, because then the Swiss franc becomes too expensive. They can't do commerce with other people. End of the day, though, there's demand at this lower price on the dollar versus the Swiss franc. Otherwise, it never would have made it there. Okay, so I believe that this thing, and just looking at this on even the year chart, do you guys think uptrend or downtrend? What do you guys think? This is the 1 year. Yeah. Down. You could prove to me that this is an uptrend. Confirmed uptrend. I'd love to see your math on this thing. But the truth is that, you know, we're getting, this is the 1 year chart. I would challenge that most of you have probably never used this one, but it does put things into some pretty good perspective as to what the bank is going to do over the years. Okay, there are 2 counter trend breaks for our downtrend. Those are the conflicting uptrends that have happened. And it just so happens that we had years of sideways movement to push us under this counter trend, and then a very strong year downward. Okay, and now we're at a little bit of a high price this year. So this could be something that, you know, the dollar could fall against the Swiss franc considerably for the next several years. Could be 4 or 5 years, could be 10 years. This fall here took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 years. Only one of those was an up year. So, you know, this could be the next decade of downstroke that we're looking at here. It could be the next decade of sideways movement. Who knows? Bottom line, it's been mostly down, and we're at a mostly high period of time. So let's get down to our month and get a little bit better look. This is making a little bit of a strong up move lately. But that said, we've got lower lows coming. Okay, you guys see this here? This is the monthly chart. This is what the trend has been doing. Those are lower highs. Okay, these are lows on the bottom. These look lower too. Okay, so I'm thinking we could keep making this move downward. But let's go ahead and get to our weekly. May not be today. Now, I'm just trying to figure out what the long term is and where I maybe want to go, where I maybe want to try to go next. All right, so it does look like I'm probably going to want to trade this thing down. Does look like we've got a pretty strong high here, and it does look like we just made a pretty strong move down yesterday. So that being the case, let's get down to our 4 hour even. Okay, and let's pull a trend line on here. Now that we've got a long-term trend figured out, okay, now I just need a place where I may want to get in, and this is why you come down to the lower time frames, is for a precision entry point. Okay, that's really what this is, in my opinion, for. I don't necessarily need to go, you know, down to this time frame if I'm going to be looking for a 1,000 pip move, but reality is, if I want to scalp, if I want to be in a trade for a couple of days, whatever, then that may be something that I come down to this time frame. We may actually have a short-term buy opportunity on this dollar Swiss that I think becomes a sell opportunity in the near future, because I think that this Arizona audit thing, when they come out with the results here in the next couple of weeks, you know, I think that they're going to have controversial results, and whether people believe them or not, it will still affect the market. And I think that there is a large conglomerate of people that are going to believe whatever this audit puts out, because it seems like they videotaped the entire thing. So I think that there's going to be a large conglomerate of American people that are going to be pretty upset. So it doesn't matter what anybody believes. It just matters that people will be upset. People will be talking about the end of America. They will be talking about a lot of terrible things that probably aren't going to be as serious as they are this year. You know, if it's really going to matter in 10 years, who knows? It's a interesting thing, to say the very least. You know, the more days that go on, though, the less people think I'm wearing a tinfoil hat. Let's go ahead and look for our extension level here. This may be what I'm looking for. Very big range trade. This is a huge opportunity. Talking about a couple hundred pips. We don't have a very wide risk on this either. So we may look for a buy position currently, but this is 158 pips with a 60 pip risk. Better part of a 3-to-1. Sounds sexy to me. So I'm going to go ahead and spread this out. Let's go ahead and set my pending order first. Short term, what I may do is actually buy this. Okay, just so we're all on the same page. But I do want a pending sell, because I think this is really the direction this is headed long term. This is with the trend. So I may make a smaller, you know, less aggressive trade against the trend, because I think that's what it may do for the next couple of days, and I want to make money there too. So let's go ahead and set my rate for my pending sell at 0.92. Okay, 92 cents. Sounds cool to me. Okay, stop loss 0.92. Let's see, 9268. My limit 0.905. Okay, so 68 pips to try to get 150. That sounds like my cup of tea. $68 risk with a 0.1. With a 0.01, it is a $6.80 risk. So you can go really small, you can go really big. You can make this a $6,000 risk if you want to. So it's totally up to the trader what the risk is on every trade. That's why you don't want to marry any of them, because you probably love the things that you marry and you'll be upset if you lose. That's pretty much what this is about. So let's go ahead and click place order on our pending sell. Let's come to a lower time frame here. I know you scalpers that want immediate gratification are wondering, why are we waiting for it to get to that price if we think it's going to get there? That's 40 pips away. We could capture that 40 pips. And maybe we can. But I want to see if it's worth it. Because really, I only want to trade against the trend to my 382 level, okay, which I think is pretty close. So it may not make sense for me to do that from where we are now. Let's go down to maybe the 15 minute. This is a really short-term opportunity if it is a thing. Because in reality, I need a stop loss somewhere. Let me get my blue line down here. This might be your short-term scalp. And I don't really have, a great place to protect my risk on the bottom. Actually, let's get rid of this lock tool. And let's make that red. Perfect. I mean, that might be your short-term scalp if people are interested in that type of stuff. That's not really my cup of tea. However, could very well be a winning trade, and I wouldn't be surprised. I'm literally planning on getting up higher. So this is a much thinner trade, so not as big risk. Risk reward is not as great. These are harder to find, okay, at the right time. If we'd been here an hour ago, this would have been a better idea, but we weren't. So I'm going to let it go. But that's typically what I might do in that situation if I think, oh, this pending order is really far away. Maybe I trade toward it for a while. Let's see what else we had here. Pound CAD, I think we're already long in. But let's go ahead and pull it up. And it seems to be going well. We're up 127 pips right now. We've been in this one for a while. Let's go to the all-time frame here. I think this one has serious legs. I think we're about to break out of this range. Well, all the reasons I mentioned earlier with the asset purchasing facility in the UK, I don't think the bank there wants to get below here. I think that this is they don't want to do that anymore. Seems to be a pivot for me. They really seem to want to be pushing this up. At least the bank is doing everything that they can to try to make that happen. And if the bank's going to do everything they can to make something happen, then, I'm going to have faith in one of the 7 biggest investors in the world in their ability to move the market, because that's what they are. So let's go ahead, draw a couple lines on here so you guys see what I'm getting at. Yeah, this is our, inner trend line here. We had that for years. Okay, so that broke. Interesting thing is, okay, that you need to pay attention to more so than anything else. On the right side of this trend line, we have higher highs than we have on the left. Okay, so just to show this here, this is a high on the right side of the trend line. Here's the one it busted on the left. Okay, so that is a bullish signal. We got higher highs. We had 2 higher highs on this other side. This is a real ugly backside test, but at the end of the day, here's a low price, higher low, higher low, higher low, higher low, higher lows. So what do you guys think? Uptrend or downtrend now? It's a very worst it's a very worst sideways. As far as in my opinion, there's no gospel in this world. The pound could crash tomorrow, just like every other currency on earth. They'd probably all have to crash at the same time, though. So I'm not really expecting that to happen. They've all been crashing for the last 50 years. Every currency on earth is worth, less than 1% of what it originally was worth 50 years ago before we got off the gold standard. So, at this point, I think that they want the value of the pound to be up, because a lot of citizens of the UK like to go other countries. There's a lot of, Brits living in Africa, for example, and in other countries in Europe. So seems to me they probably want to increase the value of their wealth without having to, go get more wealth and make more money. People that are sitting on millions and billions of pounds right now want a more expensive pound so that they can travel the world. End of the day, the UK isn't very big. If you want to expand and have businesses in other countries, you need a more valuable pound. So that being the case, I think that's going on. We have another counter trend line break, I guess. If we're looking at this as an uptrend now, right here. And we do have a higher high on the right side of this trend line as well. So I'm just going through this. Technically speaking, this is giving me lots of credence to believe all the, theories that I've got. Whether you think that I'm wearing a tinfoil hat or not, the chart is still showing higher prices. That's really what I want to look for next, would be the next high price. I think we've got legs to go pretty far on this one. Let's come down to the daily time frame, maybe do something simple like pull a Fibonacci ratio from the bottom here. Oop. Did we miss there? That wasn't quite enough. Let's get to the weekly. There we go. That's what I want. Okay, and this is our 618 down here. That it seems like a hot stove lately. Okay, so I think that we're headed, in the relatively near term, all the way up here. Okay? When I say near term, I'm talking like this could happen this year. And that's thousands of pips away. It's a year maker for some people. Okay? You don't necessarily need to trade this huge. Okay? You don't actually even need to trade the entire way up. Okay? What some people might do is turn on a robot. You may come over here. If I think that this is going to go up for this amount of time, there's no reason why it can't. At the very least, it could come test this blue line next. Okay? That's right in the meat of this market. We've been there before. Okay, that's the top of our range, our upward biased range. Just like our Aussie New Zealand was a downward biased range, this one is upward biased. So I'm very much looking to buy low here. We're at somewhat of a high price for this week. But that said, I think that we can hit some higher prices in our range. I think long term we can get way higher than this. So all of those things enumerated, I feel good about this decision. What I may do is just come down here to something like my 1 hour, okay? And maybe we're at a little bit of a high price right now, but I don't necessarily need to pay too much attention to that if I have a system check my work, okay? So what I want to do is I want to turn on something. A lot of you guys might have this Grid Trader Pro system, okay? So if I wanted to add a system to this, have this thing sit, do my bidding, get to work Grid Trader Pro, because I'm done today. We're at the end of the session and I want this thing to clean house on the pound CAD for a long time. We're about to hit that $80 mark on oil. It could go a lot higher. It doesn't seem like it has mattered so far. So I'm not going to be afraid of that. I'm going to look for buys only on this bad boy. Maximum trades, 5. Okay, this number is really important. You might want to have 2 or 3, or you might want 10. Kind of depends on you, okay? Really depends on what number you put here and how big your account is, okay? So fixed lot is the easiest way to figure out how much money is at risk. If you've never run this system in the live market, I would suggest doing it in a demo first. But that said, fixed lot, if I risk 0.01, maximum of 5 times, we're talking about, a half of a mini lot. So I may do something like a 0.02 here. You guys have seen me do a mini lot on all these other trades. Whatever, I may do something like a 0.02 there. So this thing will open 5 of those at once. So it's going to try to get more pips. Okay, pump up my pip values, take profit early on all those trades. And generally I want to, just keep moving. I want to try to find more opportunities to buy. I want to buy dips. We're at a high price. Okay, so use real stop loss and take profit. I think important. If you are not using a VPS, or if you're just uncomfortable with using a trading system, because if you use a hard stop loss and take profit, you're going to have a stop loss put in as soon as you open up a trade. So some people like that. I'm not going to use that. I'm going to let the technical settings from here do what they want. I'm going to click apply and start, and now I don't necessarily need to do anything. I can set up a trade and try to get into this right now. I'm already in it. We're up 100 and whatever pips, a lot of pips. So I don't really care to do that, but I do want to pile onto this thing if it does start to find more opportunity. So I'm kind of done with this one. I'm very bullish on this pound CAD. I just don't think that there's a buy on it right now. I think if you were looking to buy this might be a price down here at this 170, 1.8, 172 area. You could set a pending order there, which I think is probably the thing to do, is what my real opinion is on this one. But I really think that, running the automation kind of allows you to check your work, not have to worry about figuring that out as much. And you could have a little bit more of a narrow trade on this also if you're planning on using that lower pending position. So this is really what I would be looking to do in that type of situation. But otherwise, I think we are just about out of time. I got to get going here. There is a lot more trade ideas, a lot more, just videos on how to trade and run all these tools and all that stuff on our website. Okay, there's going to be a news page on here soon. Also, I've got an ebook that we're going to be releasing here as soon as I get the news page up. So, and I think I am planning on making the ebook free for a while. I want to teach people how to find currency pairs to trade and figure out, where might the trend be? Where might the strongest up or down trend be? And I want to be able to find that without looking at any charts. So I want to teach everybody how to do that. That's going to be on the website here soon. As soon as all of the more artistically inclined people make everything look prettier, I'm a very functional guy. so I did send everything that I wanted, the RSS feeds that I built and all that stuff, to marketing so that they can pretty things up. I hope you guys are having a great experience so far. We're up 620 pips right now on this account as I'm talking. Okay, so I hope you guys are doing well. This game is not about winning every trade. It's about, not even winning most of them. It's about keeping the money you make. Okay, building wealth. Okay, it's not about what you earn. It's about what you keep. Okay, so I can't say this and stress this enough. That's what trading is all about. Okay, there is no pipe dream of being a millionaire tomorrow, unless you're already a millionaire. Okay, so point is, okay, build wealth, my friends. Be patient. Thank you, everybody, for joining us today. This is going to be posted on YouTube here soon. It'll also be on the website. But you guys have a wonderful rest of your day. Enjoy your weekend and be good or be good at it. Take care, folks.